Hello and welcome to our second webinar on R&D tax relief changes. Since we last talked to you, there have been more changes introduced as a result of the autumn statement on the 17th of November 2022. I'm Margaret Savory and I'm a tax partner at James Cooper Creston, and I specialise in corporation tax and particularly R&D tax reliefs.
Hello, and I'm Tracy Bacon. I'm a corporation tax manager at the firm, also working with Margaret on R&D tax reliefs.
And in the background, we have Georgia, who's managing the technology. So we'll be asking her to move the next slide on for us. Next slide, please, Georgia. So our agenda is very much just to recap on what we talked about in the last webinar, but more to alert you and do encourage you to watch the previous webinar that we have. And then we will go on to add on a layer with the new changes that were announced as a result of the autumn statement. Now over to you, Tracy.
Thank you. Next slide, please. So as Margaret says, we're just going to do a brief recap and focus on the autumn statement adjustments. But in the first instance, we had changes to the schemes already announced and to be legislated for in the Finance Bill 2023. So the current SME scheme provides 130% uplift on qualifying R&D expenditure, and for loss-making companies giving up losses for cash, the rate applicable for the cash credit is 14.5%. The RDEC currently creates a 13% taxable grant, and then that gross amount can be offset against corporation tax liability or repaid if there is no liability subject to withholding tax at the current rate of 19%. This is relevant for expenditure prior to the 1st of April 2023. And there is an outline there of qualifying projects and qualifying costs as well. Next slide, please. So after a period of consultation around modernising and refocusing the R&D reliefs, a number of changes are coming in for accounting periods beginning on or after the 1st of April 2023. Key changes are expanding the definition of software and limiting claims where activities for subcontracted work and externally provided workers are conducted outside of the UK unless certain conditions are met. Margaret and I covered the detail of these changes in our webinar a couple of months ago, and so if you would like a refresher, there's a link to that webinar on the next slide. Next slide, please. So this is a summary of the changes coming in, including some new compliance measures, and you can see the long form link there for our original webinar, which covers this in detail. We've only seen the draft legislation at this point, and the final legislation will be published in the Finance Bill in 2023. Next slide, please. And then we had the autumn statement introducing yet more changes. And note that this is for expenditure on or after the 1st of April 2023. This is different to the changes already mentioned, which is for accounting periods beginning on or after the 1st of April 2023. The government has stated, as you can see there, that they believe these changes will make RDEC more competitive, and they're working towards a single RDEC-like scheme. The government will enter into a further consultation, setting out their objectives in relation to the new scheme and inviting comment to help shape the new scheme. Next slide, please. So what are these additional changes? You can see there the SME scheme uplift on R&D expenditure is to reduce to 86% from 130%. The tax credit rate for losses given up for a cash payment will reduce from 14.5% to 10%. The RDEC has, however, become more generous, and the grant will be at a rate of 20%. These changes are for expenditure incurred from the 1st of April 2023, and you can see the table provides a brief outline of what that means in monetary terms. Margaret will now take you through some observations and what these changes could look like.
Thank you, Tracy. So as Tracy has shown you, the RDEC is getting more attractive and the SME less so. So I just wanted to re-emphasize that you cannot choose which scheme you're in. It is a matter of fact, depending on your fact pattern. So first of all, what is an SME? It's all based on size. So it is below 500 employees and one-off turnover below 100 million euros or gross balance sheet below 86 million euros. But just watch, this is not just necessarily your entity on its own. You have to look out for those entities that perhaps have more than 25% stake in you, because you have to include a proportion or maybe all of their employees and turnover and balance sheet. So even though you on your own might be an SME, you have to look at the wider picture. But if you do satisfy those thresholds and you are an SME, you have to go into the SME scheme. Unless the next stage is if you're an SME and you receive income for your R&D. And I've listed the bullet points there. So that is when you have expenditure subcontracted to you by another company, or perhaps you receive a subsidy. So, for example, a grant from Innovate UK for your R&D. And there's a final one there where you've perhaps gone over the limits, and that's very rare, where you've received more than 7.5 million euros in an R&D project. But if you fall into any one of those categories, and we are seeing HMRC challenge more on the first two, then you should be applying for that expenditure under the RDEC scheme. And then finally, in all other cases, you are in the RDEC scheme. So it depends on your fact pattern. Next slide, please. This slide is just re-emphasizing what Tracy's already told you, which is putting the numbers again with an example. Throughout these next few slides, we'll be thinking of qualifying R&D expenditure of £100,000. And we've got three columns there. We've got the RDEC, the first column, a loss-making SME, and then a profit-making SME. And this is what you'd get under the old rules. So under the old rules, you'd get 13% of 100,000. That's a taxable grant at 13,000, taxed at 19%, so less the tax. You receive net in your pocket 10,530 for 100,000 qualifying expenditure. The loss-making SME, there's your 100,000 of qualifying expenditure. You get the uplift at 130%, 130,000, and then you can add that to the existing costs to give you 230,000 in total, which you could surrender or choose to surrender up to that amount at 14.5%, giving you the maximum of 33,350 back. A profit-making SME, well, you're already getting the 100,000 because it's in your P&L expenditure, the tax deduction for that. So it's just the tax benefit of the additional 130,000. At 19%, that is a tax saving of 24,700. So that will be for all expenditure prior to the 1 April 2023. The next slide just slots in those numbers when we're under the new rules. Again, reading from left to right, RDEC, loss-making SME, profit-making SME. So instead of, this is where the RDEC goes up. So instead of 13%, you get a taxable 20%. And there's an introduction there of the fact that the tax rates are changing as well on the 1st of April 2023. The tax rates, the corporation tax rates are going up to 25% for those companies that have profits, taxable profits in excess of 250,000. If your taxable profits are below 50,000, the tax rate will remain at 19%. And there is a sliding scale between those two amounts. So we've given you the range here by giving you both the 19% and the 25% effect. So that's the RDEC. On a loss-making SME, there's the uplift now only at 86,000. Bring in your original 100,000, so your maximum available to surrender is 186,000, and now you can only surrender at 10%, giving you 18,600. Profit-making SME, again, you get the uplift of 86,000. So what's the tax benefit? Depending on your tax rate, will be between nearly 16,500 and 21,500. So just to re-emphasize on the next slide, just shows you the winners and losers. So what's the effect of this? Taking your pre-April 2023 100,000 from your post-April 2023 100,000. RDEC is good news. You're going to be getting a bigger RDEC amount back. However, the real hurt and pain goes to the loss-making SME because you nearly lose half the benefit, a reduction in half the amount of refund you could get. And similarly, a reduction for a tax-paying SME. So what can you do about these changes? The next slide looks at a few ideas. First of all, the obvious thing is to bring forward expenditure to pre-1 April 2023. So make sure you support, get the invoice in and spend the money before the rate changes. You also need to think about factoring it into all your cash flow forecasts for the future, be that for your own internal purposes or maybe external investors. And finally, there is scope for you to tell the government what you think about these proposed changes and how it will affect your business. As Tracy's alluded to, there is going to be a formal consultation on the combined single scheme. But when the finance bill was debated last week on the 30th of November, in the House of Parliament, here's on the record as what Victoria Atkins said. I hope that we'll be able to resolve those concerns working with the bio industry, the Federation of Small Businesses and other R&D intensive small businesses ahead of the budget in the spring. So the government are on the record as saying they are listening to the concerns raised by these R&D intensive industries. Thank you. Over to you, Tracy.
So thank you. So thank you for watching today. And just a reminder that our earlier webinar, the link on the slides is available for you to watch also. And plus our details are on the following slide. Feel free to contact us if you've got any further questions. Thank you.
Thank you.